Come on, everyone. Pack your bags. Let's go to USA. Let's now discuss the most interesting topic in borrowing cost. That is foreign exchange difference to the extent to be construed as interest. And this is interesting because there is a lot of interest computations involved in this concept. And I asked you to pack your bags. Did you pack your bags? Come on, everyone. Pack your bags. Let's go to USA. We are going to US to buy an asset. And when we go to buy an asset in the US, the seller is from US. Let us say we're buying an asset from the US seller for $10,000. And that seller doesn't understand rupees. He wants us to pay him the money in dollars. Whenever we buy an asset from an US vendor for $10,000, we have to pay him $10,000, not rupees. I have two options. One, I can take loan in India, SBI, State Bank of India. After lunch break, I'll take the money. I'll go to Western Union or any foreign exchange dealer, convert that Indian rupees to dollars, and then take the $10,000 and then pay it to my US vendor. Or I have another option. Instead of taking loan in SBI bank, translating it to dollars and then sending it to my US vendor, take loan in US bank, take loan in Citibank USA, pay that vendor, and then settle this US loan in 2 years, 3 years. Like no SBI loan you will pay in 3 years. No. Instead, settle that Citibank loan in 3 years. So you have two options. If you had this option, which option would you pick? Would you take loan in SBI India or would you take loan in Citibank USA? Depends upon the interest rate. That is a primary consideration that you decide upon. For example, in India, the interest rate for the loan is 12%. In USA, interest rate is 3%. You tell me, will you borrow in rupees in Indian bank and convert it to dollars and then pay the vendor from whom you purchased asset? Or will you borrow the money in US dollars at 3% and then pay the vendor and repay the loan with interest later? You tell me which is lower. Don't ask, don't tell again which is lower. Which is lower? Very good. The rate of interest in US bank is lower. So you would suggest or you would prefer to take the loan in USA at 3% and then pay that vendor and not take the loan in India. This is where the concept of IRPT comes into picture. What is it called as? IRPT. Interest rate parity theorem. Interest rate parity theorem. It says that it doesn't really matter whether you take loan in India at 12% or you take loan in USA at 3%. The reason is the exchange rates will move in such a way that this arbitrage opportunities with interest differential will not arise. Just matter of fact, for all of them who are listening, this is not a topic from CA intermediate. This is CA final AFM topic, which is to be known to you to complete this borrowing cost computation. Let me repeat once again. If you borrow the loan in India at 12%, you pay higher interest. If you borrow the loan in USA, you pay lesser interest, 3%. That's what is happening in our mind. But IRPT, interest rate parity theorem, says that this interest differentials that is there between two countries, no, is the basis based on which the currency rates will move between two countries. Now, right now, the exchange rate is 80 rupees per dollar. To get $1, how many rupees should we pay? 80. Because the interest rate is high in India and interest rate is low in USA, people borrow the money in USA, bring money to India and invest. Super duper idea. Why to do CA? So that you'll get a good job. Why to get a good job? So that you'll get very high salary. So the idea is you don't have to become chartered accountant to make money. Very simple. Today, stop attending the class. Go home. Take loan from a US bank at 3%. Convert that money to India. Deposit in India in bank for 12% interest rate. After some months, withdraw the money with the 12% interest in India, translate it to USD and then pay back the loan at 3%. Oh my God, 9% profit. This will not work. You know why? Because the foreign exchange differences will move such that this kind of arbitrage opportunity will not exist. Today, it is 80 rupees per dollar. After 1 year, exchange rate will become 87 rupees per dollar. How much will it become? We know that it will become 87. Market mein rates are fluctuating. Keeping political friendships, so attack on somebody, whether someone is friend of Narendra Modi uncle or not friend of Narendra Modi uncle, did they hug or did they only shake hands? Keeping all of these geopolitical scenarios and political relationships aside, if you keep these aside, how the foreign exchange differences happen between two countries is called IRPT. Let me show it to you with the help of numbers. Basic question: what is the rate of exchange today? Rupees 80 per dollar. What is the exchange rate after 1 year? Very good. What is the exchange rate in India? What is the exchange rate in USA? This is determined like this. This 87 is Gayab. I'll eliminate this 87. I'll tell you how to find this 87. I'll tell you how to find this 87 after 1 year. This is given by IRPT. Interest rate parity theorem says 1 plus RH divided by 1 plus RF is equal to forward by spot. RH is rate of interest at home country. RF is rate of interest in the foreign country. Forward is future exchange rate. Spot is today's exchange rate. So what is the rate of interest in the home country? 12%. What is the rate of interest? Your home is India or USA? Oh, she's like, okay, Virat Kohli goes to London, I go to USA. Navella Indians illೇ ಇರ್ತೀವಿ. Okay, rate of interest in home is how much? 12%. Rate of interest in USA is how much? So 1 plus RH by 1 plus RF is 1 plus 12% and 1 plus 3%. What is the forward rate? What is the spot rate? Spot rate is 80. Forward rate, we don't know. We'll find. So I'll write forward by spot. 1.12 into 80 divided by 1.03. Fatapat, please do it. What do we get? 86.99. That's nothing but 87. So whatever you save by way of interest, you end up paying it as exchange difference. I know you understood little, but not completely. So keeping this formula outside our entire discussion, let's try to do it step by step. Shall we try to do it step by step? Focus. This is the question that we are going to solve. Take a pause here. Quickly copy this question. There is a machine that we purchased from USA at a cost of $10,000. And the day when we buy it, no, the exchange rate is 80 rupees per dollar. At the end of 1 year, exchange rate is 87 rupees per dollar. The exchange rate, sorry, the interest rate in India is 12%. The interest rate in USA is 3%. Now, we are keeping this entire IRPT aside and still doing borrowing cost. I'm telling you both are same, but without using the concept of IRPT, if we try to do, how will it sit? I hope everyone has understood the question. Now, I have two options. I can make the borrowing in USA or I can make the borrowing in India. But looking at these numbers, you feel like in India the interest rate is high. In USA the interest rate is low. So you would want to buy it in India or in US? Very good. Sorry, you want to borrow the money in India or in US? Let us say we borrowed the money in USA. We borrowed the money in, this is the actual scenario. This is only an if, what if scenario. See, that's the reason if is in red. If is only an assumption. If we had done, what would it have been the case? But where have we borrowed now? Okay. What is the value of the asset? $10,000. What is the value of the asset? And we took $10,000 as loan to buy this asset. When I take the loan as $10,000, what is the loan in terms of rupees? Because 10,000 is dollars. I would not take 87 into consideration. I'll take 80 because I've taken the loan today. Today's exchange rate is 80. Please do 10,000 into 80. 8 lakh rupees. 8 lakh rupees. Everyone understood this? Now let's see at the end of year 1. What would be the interest amount? Interest amount will be on rupees 8 lakh. It will not be on $10,000. Or will it be on $10,000? Where did we borrow money? Did we borrow the money in India or in USA? So the interest will actually be on $10,000. What is the interest rate? It will be 3%. Compute $10,000 into 3%. $300. 300 loan is taken in USA. Interest rate will be applicable as US rate, and the interest also will be written in dollars, not in rupees. But in Indian books, if I have to write that expense, this $300 would be how much rupees? It will not be into 80, it will be into 87. Why? Will you pay interest on the date you take the loan or will you pay interest at the end? At the end. At the end, exchange rate is not 80. At the end, exchange rate is 87. So this $300 of interest is paid at the end of year 1. When do you pay? At the end of year 1, please do $300 into rupees 87 per dollar. Rupees 26,100 is the interest that you would have to pay. Now, this is the interest that you would have to pay if in case you had borrowed the money in USA. Why are you borrowing the money in USA? Because you feel this 26,100 is very less. Same money if you would have taken in India, you would have paid much more interest. How? Let us keep this borrowing in USA as hold. And now let's come to if the money was borrowed in India. See, the asset price is $10,000. To buy the asset of $10,000 in USA, I have taken loan in India, translated or converted the Indian rupees to dollars and then paid. Am I right? How much money should I take as loan in India? I need to pay 80 rupees for each dollar and I need $10,000. Do $10,000 into rupees 80 per dollar. How much money will I take in Indian SBI bank? 8 lakh rupees. Now, at the end of 1 year, Indian bank will charge me interest. It will not charge interest at 3%. Indian bank will charge interest at 12%. And Indian bank will not charge interest on $10,000. Indian bank will charge interest on 8 lakh rupees. So please do 8 lakh rupees into 12%. 96,000. So this is the comparison that you did when you decided to take the borrowing in USA. Because if you had taken the loan in India, how much would have been your interest expense? 96,000. Because you took the loan in USA, how much is interest expense? 26,100. Interest is expense. You want to minimize your expense. To the extent possible, you want to incur lesser expense. How much expense should you incur? How much expense do you want to incur? 26,100. So you decide to take the borrowing in USA. So you are telling I am very smart. Why? I took loan in USA, not in India. By doing this, I actually paid only 26,100 rupees as my interest. For those who took loan in India, you pay 96,000 as interest. You're doing that, but actually you did not save. I'll tell you how. When you took the loan, it was $10,000. Today, how much is the loan? Sir, $10,000. Allah, $10,000 correct. Loan taken 10,000. Loan outstanding at the beginning of the year, $10,000. Loan outstanding at the end of the year is also $10,000. But if you represented it in rupees, in the beginning of the year, the loan is 8 lakh rupees. In the beginning, the loan is 8 lakh. Now the loan is not 8 lakh rupees. It is $10,000 into rupees 87 per dollar. How much is it now? Now if you have to repay the loan, for each dollar you have to put 87 rupees out of your pocket. So the loan has become 8 lakh 70. Loan was 8 lakh no in the beginning of the year. Loan has increased to 8 lakh 70. Loan was 8 lakh in the beginning of the year. That is $10,000. The same $10,000 now has become 8 lakh 70,000 rupees. 70,000 rupees my principal or liability or loan amount increase? No. Yes or no? Take this 70,000, add it to this 26,100. 96,100. That 100 is rounding off difference. Ili nodi? 96,000 is the interest. So, if you had taken loan in USA, if you had taken loan in, your borrowing cost for that asset is 26,000, correct, but not only 26,000. This 70,000 and 8 lakh and 8 lakh 70,000 difference, 70,000 is there, no? Increase in my liability. That is also in the nature of borrowing cost to the extent of 96,000 in total. If you had taken loan in India, your interest would have become 96,000. So, up to 96,000 is your borrowing cost. Up to 96,000 is your, so your interest is only 26,100. So, your interest is only 70,000 increase in liability is also considered as borrowing cost. For taking this borrowing in USA, how much is the money that you are paying? 26,100 by interest. Premium on repayment of loan, 70,000 and 8 lakh became 8 lakh 70,000. Together, how much is it? 96,100 is your expense of taking loan. If you have taken loan in India, how much it would have become? So in that 96,100, 96,000 is in the nature of interest. Only 100 rupees is exchange difference. Did you understand? That is what we are trying to learn. I'll explain. Where did you take loan? India or USA? So your actual borrowing cost is 26,100. What is your actual borrowing cost? 26,100 is actual, but there can be additionally extra money as borrowing cost. What is the additional money? The standard says it has to be increase in liability. How much did your liability increase by? Or savings in interest. How much is savings in interest? Because you took loan in India, if you would have taken loan in India, it would have become 96. Because you took loan in USA, it is 26,100. Difference is savings, no? 296 minus 26,100. Whichever is less among this is additional borrowing cost. 69,900. So total borrowing cost is 96,000. 26,100. The interest on the US loan is actual borrowing cost. 26,100 interest on the US borrowing is actual. After that, we compute additional borrowing cost. How do we compute additional borrowing cost? Additional borrowing cost is increase in liability. 8 lakh rupees of loan becoming 8 lakh 70,000 is increase in liability. Or savings in interest. If you would have taken loan in India, you would have paid 96. Because you took loan in USA, you paid 26,100. The difference is there, no? That difference is savings in interest. You saved so much money in interest. To save 69,900 by way of interest, you increase liability worth 70,000. To save 69,900 in interest, you increase your liability by 70,000. So that is nothing but additional cost. But you should take whichever is less. Totally, how much is borrowing cost? If that asset is a qualifying asset, this 96,000 can be capitalized and not only 26,100. Got it? 96,000 is the total amount which can be capitalized. Did you get this? Foreign exchange difference was 70. In that 69,900 we treated as additional borrowing cost. No. So only 100 rupees is foreign exchange difference. Basically, how much was the loan? 8 lakh in the beginning. How much did the loan become? How much is the increase in foreign currency liability? 70,000 increase only, 69,900 rupees will be treated as additional borrowing cost and only 100 rupees is foreign exchange difference. Usually we think 8 lakh rupees of foreign currency loan became 8 lakh 70,000 rupees of foreign currency loan. Entire 70,000 increase in foreign currency loan is our foreign exchange difference. No. Because this interest should have been 96,000, but we have reduced the interest from 96 to 26,100. And because of that, foreign exchange difference has arisen. So borrowing cost can be taken till the extent of 96,000. Only beyond that, if there is something, that will become foreign exchange difference. Did you understand this? So though you took loan in USA, Indian loan alli ತಗೊಂಡಿದ್ದಿದ್ರೆ ಎಷ್ಟು interest ಆಗ್ತಾ ಇತ್ತು? If you had taken loan in India, what would have been your interest? That becomes your borrowing cost to be capitalized. Isn't it common sense? There is no theorem. There is no step 1, step 2, step 3, step 4, step 5, step 6. You shouldn't be doing step 1, step 2, step 3. Everyone does steps in this. Step 1, this amount. Step 2, this amount. 1 minus 2, this. And then 3 item, this amount. 3 or 2, whichever is less. Add it to step 1 number. That is the amount of borrowing cost. They do like that. Don't do that, no. Simple. Whatever is the loan taken, on that loan, actual interest is actual borrowing cost. Additional borrowing cost is two things. Savings in interest or increase in liability. Whichever is less. Over and above that, whatever is there is foreign exchange. You get this? See, you can do this in the exam. This is what is expected from you in the exam. Exam, you're supposed to do only this much. Only this much. But this will make no sense until and unless you understand that this is the story behind. Did everyone get this? Patapat, you copy this answer. I will make you do one more example like this. After that, we'll start taking up questions from the class meeting. This much is one computation. Now shall I scroll down to the next part? There we go. Let's do another question to concretize the concept that we've just learned. Copy this question. Copy this question and let's start solving. You have purchased an asset from USA for $10,000 and for this $10,000 worth of asset, the money is to be paid 1 year later. Today, the exchange rate between Indian rupees and US dollars is 80, meaning 80 Indian rupees will give you $1. At the end of 1 year, the exchange rate has become 86 rupees per $1. And the rate of interest as of date today in India is 10%, and in USA it is 2%. As an obvious decision, they have decided to take the loan in USA. They have decided to take the loan in. If they take the loan in India, it is not difficult. On the Indian loan, at Indian rate of interest, whatever is there, that is borrowing cost, ashte, mugitu. But the case becomes interesting when they've taken the loan not in India, but in USA. In this case, they've taken the loan in USA. Shall we start? Very good. Now observe. When the borrowing is made in USA, the borrowing is $10,000 because the asset purchase is $10,000. If I have to show this asset purchase for $10,000 in Indian currency, that loan that I have taken $10,000 in Indian currency, each dollar is rupees 80, loan will be 8 lakhs. But when I have to compute interest at the end of 1 year, interest will not be computed on 8 lakh rupees, interest will be computed on $10,000. On $10,000, what is the interest rate in USA? 2%. Please do $10,000 into 2%. $200. In Indian currency, this $200 will not be multiplied by rupees 80. Instead, it will be multiplied by 86. Why 86? Because interest is to be paid at the end of 1 year. So please do it. $200 into rupees 86 per dollar. 17,200 is our actual borrowing cost. There is no second thoughts about this. But however, if I would have taken loan in India, asset price would have been $10,000, loan taken $10,000. In Indian currency, the loan would be 8 lakh rupees. For each dollar, it is 80 rupees. Got this? Now, at the end of 1 year, interest has to be paid on 8 lakh rupees at 10%. Please do 8 lakh into 10%. 80,000. See, if I take loan in India, I have to pay 80,000 as interest. Because I took loan in USA, I need to pay $200, whose equivalent value is only 17,200. Yes, I saved 52,800 rupees. Am I right? 62,000, 52,800. Okay, 62,800 rupees I've saved. Yes or no? I've not saved it. That has been compensated by increasing in the liability. Liability was 8 lakh, no beginning. At the end, it is same $10,000, but at 86 rupees per dollar, which has become 8 lakh 6. Loan was 8 lakh, it has become 8 lakh 60. 60,000 increase is there no in liability. This has happened because you saved interest here. How much did you save? 62,000. To save 62,800 of interest, you have increased your liability of 60,000. So to the extent of 62,800, it can still be your borrowing cost. It can still be your, because you took loan in USA. What is your total loss? What is your total expense? 17,200 by way of interest and 60,000 by way of increase in liability. ಎಷ್ಟು? 60 plus 17,200. 77,200. How much is the total? Interest in the form of 17,200, increase in the liability by 60,000, totally 77,200. If you would have taken loan in India, interest would have been 80,000. So your actual plus additional borrowing cost is 77,200. Actual plus additional borrowing cost will be 77,200. This is common sense. If not, you can write it and compute any day. What is your actual borrowing cost? 17,200. Why? Did you take loan in India or USA? USA, this is only if scenario. This is imaginary scenario only. This is not the true scenario. Got it? So if we had taken loan in India, what would be the case is what I'm doing. Actually, we've taken loan in USA. So my actual borrowing cost is $200, which is 17,200 rupees. Now I'll compute my additional borrowing cost. Additional borrowing cost is increase in liability or savings in interest, whichever is less. Increase in liability or savings in interest, whichever is less. So increase in liability is 60,000. Savings in interest is 80,000 minus 17,200, 62,800. Whichever is less is 60. So total borrowing cost is 77,200. 77,000. How much is my increase in liability? 62,800. Sorry, 60,000 is increase in liability. Increase in liability is how much? That entire 60,000 became additional borrowing cost. So there is no foreign exchange difference. Foreign exchange difference is 60,000 no in the beginning. How much is my additional borrowing cost? 60. So foreign exchange difference is 0 because entire foreign exchange difference is treated as additional borrowing cost. Entire foreign exchange difference is treated as additional borrowing cost. Did you understand this? We did the first scenario where it was matching almost 100 rupees different. We're doing another scenario where entire foreign exchange difference has become additional borrowing cost. Next, we'll do a question where this foreign exchange difference with interest will be more than the borrowing if it would have been made in India. So there will be higher exchange difference. I'll make you do one last question. But for now, please copy this solution. So this is the computation for borrowing. And this is the computation of borrowing cost to be capitalized and the exchange difference which is balanced. And let's solve one more question and this will be the last example. Please copy. Understand this third accounting question. We have bought a machine from USA for $10,000. And when we bought this machine, the exchange rate is 80 rupees per dollar. After 1 year, exchange rate is rupees 90 per dollar. In India, the exchange rate, in India, the current, say interest rate is 10%. And in USA, the interest rate is 2%. Come on. If in case we buy the asset in USA for $10,000 and we take the loan in USA, then the loan taken is $10,000. If you have to represent in Indian currency, it will be $10,000 into 80 rupees per dollar, which comes to rupees 8 lakh. Interest has to be paid not on 8 lakh rupees, but on $10,000 at the foreign rate of interest of 2%. If I do which, I'll get $10,000 into 2%, $200 as my interest expense. If I have to represent this interest of $200 in Indian currency, we need to take the closing rate, not the opening rate, because interest will be paid at the end, not at the beginning. $200 into 90 rupees per dollar will give you how much? 18,000 rupees is interest expense. You thought you have saved by paying 18,000 rupees. Why? Because for purchase of this asset for $10,000, if you had taken loan in India, loan would have become 8 lakhs, which is converted to $10,000 and then paid. Then at the end of 1 year, interest will be computed not on $10,000, but on 8 lakh rupees. Not at 2%, but 10%. 8 lakh into 10% is 80,000 rupees. What would be the interest expense? 80,000 rupees. So if you take loan in USA, your interest expense is 18,000. If you have taken loan in India, your interest is going to be 80,000 rupees. Are you thinking that you saved 62,000? Not really. Because at the beginning, the loan was 8 lakh rupees in Indian currency. If the loan is taken in USA, if the loan was taken in USA, the loan would be $10,000. But when you try to represent it in Indian currency, it is no longer rupees 80 per dollar. It is now rupees 90 per dollar. To do the same $10,000 into rupees 90, it comes to 9 lakh. Did everyone understand 9 lakh? So loan in loan taken in USA in Indian currency at the beginning is 8 lakh rupees. At the end is 9 lakh rupees. There is increase by 1 lakh. How much is the increase? How much is the interest? 18,000. So together, totally, the expense of taking this loan is 1 lakh 18,000. The expense of taking the loan in USA is how much? 1 lakh 18,000. If you had taken this entire loan in India, it would have been only 80. So to the extent of 80,000, it is borrowing cost. Beyond that, it is foreign exchange difference. This 18,000 is actual borrowing cost. 18,000 is next. Additional borrowing cost is difference in this increase in liability. 8 lakh to 9 lakh. How much is that? 9 lakh. Or how much is this? What do you say? Our savings in interest. 80,000 to 18,000. How much is 80 and 18 difference? 62,000. Whichever is less is 62,000 will become your additional borrowing cost. Totally, it would become 80. Your increase in liability is from 8 lakh to 9 lakh, which is 1 lakh rupees. In this 1 lakh, in this 1 lakh. 62,000 will be treated as foreign, 62,000 will be treated as additional borrowing cost and not foreign exchange difference. Balance of 38,000 is genuine foreign exchange difference. And whatever we computed as borrowing cost, no, till now, additional borrowing cost, this will be treated as per accounting standard 16. And whatever we computed here as foreign exchange difference, this treatment is told by accounting standard 11. Understood?